Hey everyone, welcome to the KE Report and a daily editorial on what is turning out to be, I think, probably one of the most, if not the most volatile weeks for markets, especially in the US ever, at least in my lifetime. It has just been crazy to see on the back of, unfortunately, kind of tariff news, kind of not tariff news tweets. Markets are all over the map, and today is a big day of red after yesterday, a day that was one of the best in record for the U.S. markets. Man, oh man, a lot for us to cover here as we chat with Brien Lundin. Brien is the editor of the Gold Newsletter and our host down at the New Orleans Investment Conference, this year happening November 2nd through 5th. Brien, again, volatility continues to reign supreme, and as much as we don't want to talk about tariffs and geopolitics and politics, seems to be what is driving a lot of these market moves. As I said yesterday, great day for the markets, but that was coming off of a few really bad days, and today the markets are down a lot, 4 to 5% almost across the board. Every sector is getting hit, and the thing that stands out to me is the dollar. The dollar is down to almost 100 on the dollar index, down almost 2 full points here. Brien, give us some insights. What are you taking away from this just crazy market we're watching?
Yeah, Corey, you put it perfectly. It's the volatility. And of course, that's what everybody's talking about. But, we've had periods where we've had extraordinary volatility in the markets. You look at 2008, you look at 2020. But in those occasions, we had days when the markets were really down. Everything, liquidity vacuums, everything sells off. Then the next day or 2 days later, everything rebounds when they see the Fed coming into the rescue or whatever. But you didn't have this kind of intraday volatility, where the Dow is down over 2,000 points at one point and then up 2,000 points. And of course, percentage wise, well, even percentage wise at these levels, it's still extraordinary moves intraday. And it's really amazing to witness. But I think it's important that we realize and understand some of the differences right now than those previous crises that we had in the past. And one is that in those previous instances, we had the fairly widespread gold ownership by Western investors and speculators and hedge funds and the like. And we don't have that now. We haven't had that. And therefore, the margin call related selling in gold, where gold serves as the piggy bank that gets broken in case of emergency for liquidity for some cash and to meet margin calls. We had a little bit of that early on in this volatility, this kind of crisis, tariff created crisis, but not nearly as much. And gold has been rebounding. Importantly now, as we look at the Dow, the NASDAQ, the S&P, everything off, 5% today, again, we see the gold stock indices up. We see gold up strongly. So we have not had that kind of a reaction, even in this market recently, where we've had the mining stocks responding. And gold has been the all-weather investment, but it's moved an awful lot over the last year or so. And Western investors are looking at it and saying, how can we play it? Well, they're picking the mining stocks finally as a way to get involved in the market and a way to get leverage on this move in gold. So it's all coming up roses for metals and miners right now.
Yeah, Brien, it's nice to see, and it's the divergence we've been kind of watching for, where people say gold equities are stocks and stocks are stocks, but the reality is all year long, the gold equities and gold has been diverging from the general U.S. equities and even things like Bitcoin. So there's a nice divergence going on where it's getting the safe haven bid, but it also may be getting, I guess, a momentum bid as the only place in the markets that tends to have stayed in the green most of 2025. So do you think more generalists, because the big question we've had for, I don't know, a decade, where are the generalists? When are they going to see the sector? It'll be hard to ignore the differences in outperformance in pricing from Q1 and what the earnings were in Q1 versus what other sectors did. And it looks like that's continuing rolling on into Q2. So do you think this is going to get on more scans from generalist investors where they just can't ignore this divergence.
Yeah, we already saw that rotation happening because gold was outperformed everything except gold stocks in the first quarter. And now we have all that reporting coming in, and the institutions, the hedge funds that didn't own gold going into the end of the quarter started to buy it and get positioned so they could report that they were at least involved. And now the ones that weren't post quarter are getting involved. And so we saw that rotation happening to begin with. And now that we've seen this further volatility and everything else crashing, even more rotation, it's really accelerating into the metals. And, I put out something to our readers yesterday, again, reiterating that gold has been telling us something over the past year. And everybody's been trying to figure out, what is it saying? Is it saying that we're headed toward more inflation, even stagflation? Is it saying that the world is de-dollarizing because of the weaponization of the greenback? Is it predicting a recession and easier money ahead? And my conclusion was that, gold is telling us that it's not one thing, it's everything. And at bottom, gold is the only thing that protects against everything. And I think that's the realization that the market is having right now. It's amazing to me that in what is essentially a liquidity vacuum across all other asset classes, that not just gold is up today, but gold stocks. In 2008, gold stocks did not react to the crisis because nobody wanted paper of any sort. Paper was a potential liability. Gold was no liability. So every investors flocked to the safety of gold and they ignored the mining stocks. In this case, there's still enough speculative capital out there that is rotating into the mining stocks. It really is the Goldilocks situation for investors in this sector.
You're right. This does seem like the Goldilocks situation where there is market weakness. It seems to be really the only sector that's up on my screen here, other than, let's say, some other maybe defensive sectors like volatility, but the other defensive sectors like bonds and the US dollar, those are also down. So, Brien, have you seen this in history where, yes, gold is proving to be the safe haven, but it seems like investors are turning away from other safe haven assets?
I can't recall it happening. And I have, been a big believer that we do not need to see a downdraft in the dollar index in particular, because that really is just, a gauge of how the dollar is performing against its other fiat currencies. My view has always been it's not a dollar issue, it's a fiat currency issue, that all of these fiat currencies are suffering under major debt loads after decades of ever easier monetary policies, and they're all falling at different rates, and they just exchange the lead on the way down the hill on occasion. So the dollar index really isn't indicative of much. It's gold versus the dollar, gold versus these other currencies. So you really didn't need weakness in the dollar. That said, it certainly don't hurt. And as we're seeing today, no, I don't think I have ever seen this kind of a situation where there is only one anchor, one safe harbor in all of the investing universe. And it's not only gold, but it's gold related investments. I'd like to see silver react a bit, but I think that's also a sign of, silver's industrial usages that silver bugs often use as or tout as an advantage that silver has. Sometimes it's just a stick to beat the metal over the head with. And that's what we're seeing now. When you're predicting economic slowdown, silver gets hit. And that's why I think it hasn't been performing. When we see the monetary response to all of this from central banks, then I think we'll see silver get out of bed and start catching up to gold and surpassing it. So that's probably, if you're looking at bargains today, that's probably a good area.
Yeah, Brien, what you say is so important because the other factor is that one of the big buyers of gold over the last couple of years have been central banks, and they don't buy silver, they buy gold. And when people are globally worried about their fiat money, to the point you also made, gold is up in every fiat currency on the planet. This is not just a US dollar gold phenomenon. This is a phenomenon where globally gold is up in all fiat currencies, which just goes to show the counterbalance that really what's happening is the fiat currencies are becoming less and less valuable. Their purchasing power is going down, and gold is just buoying up higher in every currency on the planet. So could it be that gold has the global bid where US equities, US treasuries, and even the US dollar maybe has money fleeing? Is it possible that there's money fleeing US markets, not just on the dollar side, but also on the bond side and possibly on the equity side to move internationally?
Yeah, I don't think it's possible, and I don't think it's even possible. I think it's obvious at this point. I mean, even the Wall Street Journal had a piece out yesterday touting how everybody it's sell America across the world and anything related to America. And you guys know better than me, but from what I'm hearing, there's a lot of anti-US sentiment in Canada right now, just on the street, in everyday commerce. So yeah, I think that's it. And I've always discounted to a large degree the whole BRICS argument, the whole dollar losing its reserve currency status as a factor for gold, because I don't see it happening and never seen it happening in our lifetimes, while still recognizing the trend in that direction. I really have never thought that the dollar could lose its reserve currency status, because of the rule of law in the US is still the best in the world. And that's where funds find safety and security. And for that reason, more than any other, I really have always felt that the dollar would maintain its reserve currency status. But when you have this kind of uncertainty in regards to the US, when you have 20, 30, 50% or more tariffs being enacted on a daily basis on a whim, on a spontaneous decision by one figure in charge, then that kind of wipes out the reliability argument of the rule of law. So that trend, while I'm still doubtful that the dollar will lose its reserve currency status, I think that accelerates the trend. And I think that's obvious right now. The trend has accelerated. The one thing that gives you insurance against all of these kinds of, sporadic diktats of dictatorial heads of state, the one thing that protects against that, the one thing that protects against everything is gold. So that's what we're seeing right now. It seems obvious to me.
Yeah, you're right. That is what we're seeing. Personally, it's a little scary for me. I don't even live in the US. I live in Canada. But if we do see, and who knows if this will actually play out, but the world turning on the US, what a different environment, market environment and global environment that we would live through. Again, this is all so early on, and we're 90 days, let's say, into this presidency, but boy, oh boy, it's something to definitely keep our eyes on. Back to the gold stocks then, Brian, because look, those are providing wins for investors. Are you at least a little bit worried about some of the smaller cap gold stocks compared to the larger cap ones, simply because, look, if it is a defensive move, you would think that investors, they would like to maybe limit some of their risk and simply stick to the larger cap companies, because those are the ones making the most money. And quite frankly, those would be kind of the safest bet, even in a bull market, in the grander scheme of a bear market or a crashing global market.
I think that philosophically, I might be a little worried about an ultra speculative sector like junior mining stocks in an environment where we're having liquidity vacuums across, all the major asset sectors except gold and the major miners. But as I look down my tracking portfolio, the junior mining sector, I'm seeing an awful lot of green on the screen, and not just a little bit of green, a number of companies up 9, 10, 15, 20% on the day, in some cases on decent volume. It's very encouraging. I don't know that, again, that I've seen this kind of market-wide reaction, or this kind of reaction in favor of the very sector that we're involved in. Pinch me. Are we dreaming?
That's a great point, Brian. How many times have we talked where it's been the reverse of this over the years, and we're like, is this sector ever going to get any love? And now it's getting all the love. Just back to the gold and silver relationship, though, a lot of times when you look at a chart over the last decade, you'll see a very tight correlation between something like GDX, which is the major gold producers, and silver. Same thing with GDXJ. They're almost mirror match charts. They're not perfect, but there's a big correlation between the speculative money coming into silver and what happens in the gold equities. It's possible that if gold keeps running away, and the gold silver ratio is already, I think, around 100 or so, if it just keeps pulling away, is it possible that gold finally pulls gold equities out of that correlation with silver, where they just march to the beat of their own drum? And will there be a divergence between gold stocks and silver stocks? Or do you think eventually silver just gets dragged higher with everything, as do the silver stocks? How are you looking at that relationship?
Yeah, it hasn't paid off yet, but other than in a few short periods, but I just look at it very simply, Chad, and don't overthink it. Every time there's been a monetarily based, long-term bull market in gold, silver has outperformed gold, and I think it's going to happen again. That said, there is over the recent decades, there has been a trend where silver has been gaining industrial usage and losing its kind of monetary cachet. But I think it's still there for silver to some degree. Yeah, I don't think it's still there for platinum and palladium. Like when I started in this business so many years ago, platinum and palladium were looked upon as monetary metals and an equal weight with silver, at least. I don't think that's anywhere near the case anymore. And I think that silver has been losing some of its monetary mystique. But I just think it's going to perform again, as recently as the last few years, as recently as the spring of 2016, we saw extraordinary moves in silver and in silver mining stocks over short periods of time. I just have this feeling we're going to see that erupt again in this cycle, and it's just being, delayed a bit. Because again, what's really been moving this market has been central banks and Chinese buyers for the yellow metal itself, for gold. And they don't buy mining stocks, and they don't typically buy silver.
Yeah, very true. Hey, silver usually does get pulled along. That's what history tells us. Sometimes when silver makes that spike high, it can sometimes dictate a top or at least a slowdown in that market. So right now, still seems just simply encouraging, I think, for all the precious metals investors to see gold continue higher, and the stocks that they are joining in on this rally. They are doing very well, even through that volatility in the last few days when we saw that global drop in pretty much everything. Turned out to be a pretty good buying opportunity for some of these precious metal stocks. Brian, we'll wrap it up here. Again, Brien Lundin, editor of the Gold Newsletter. Click that link in the show notes to read over Brian's newsletter. Brian, thanks for your time today.
Thank you, guys. Always a pleasure.